The Reserve Bank's Monetary Policy Committee is expected to announce its decision on interest rates in Pretoria this afternoon. In May, the bank raised the policy rate by 25 basis points to 7%, while the prime lending rate jumped to 10.5%. Inflation remains above the bank's 3% target. Statistics South Africa's latest inflation print shows that inflation rose above analysts' expectations to 5% in June. Rising fuel prices due to the US-Iran war have been driving inflation pressures. Right, to expand the conversation, we're joined by Mpho Molopyane, who's Chief Economist at Alexforbes. A very good afternoon to you. Thank you so much for your time. I mean, economists seem unusually divided ahead of this meeting. Why is this one of the toughest interest rate calls the Reserve Bank has faced this year?
Good afternoon to you and good afternoon to your listeners. I think that is because the macroeconomic environment has been quite uncertain, and that has primarily been driven by what's happening in the Middle East. I mean, if you just think about it, July has been such a whiplash, right? We literally started off the month with Brent crude prices at around $70 a barrel. And today, as we speak, prices are approaching $100 a barrel, right? So, that is behind the split that we are seeing in the market from economists. But if we just look at the underlying factors, right? I mean, as you showed earlier, inflation came out at 5%. Yes, a part of that has been higher fuel prices, but we are also beginning to see underlying inflationary pressures, and services inflation in particular is at 5.1%. So the SARB has to act just on those bases. And with oil prices sitting where they are today, we may have to actually be speaking about additional hikes in addition to the one that we're likely to see today.
Yeah, absolutely. I mean, with markets almost split down the middle between a hike and a hold, what are some of the other economic indicators that the MPC will be weighing most heavily?
So I think what is quite positive is how resilient the rand has been, right? So that has helped in terms of also curbing some of the imported inflationary pressures. What the SARB will also have to consider at this meeting is what other central banks are going to do, particularly the US Fed, right? So that has become so topical in the market. Yes, the SARB will argue that we don't follow what other central banks are doing, but unfortunately that interest rate differential does tend to play into the currency. Now, this is going to be an important consideration for the MPC members today, because even then, there's uncertainty around that. So there's uncertainty around fuel, where all prices are going, but there's also uncertainty around the global monetary policy outlook in general, and most importantly, what the Fed is going to do. So if you look at all these factors, if anything, it suggests that the risks to the inflation outlook are to the upside rather than to the downside. And based on that, we're likely to see, at the MPC committee voting unanimously for a hike at this meeting.
Because, the escalation and tensions in the Middle East between the US and Iran has, of course, as you mentioned, sent oil prices higher again. Are we now going to see, I mean, depending on the outcome, and get a sense today of how much geopolitics influences monetary policy in South Africa based on what the outcome will be?
Yeah, unfortunately, geopolitics are having a much greater impact on macroeconomic policy in general. And I think we need to appreciate the transmission mechanism, right? So, politics usually tend to play out in commodity prices. The war in the Middle East has put at risk oil supply. So whenever your demand and supply dynamics are being challenged, then you will tend to see that playing out in commodity prices. So now, because of the shortage in oil supply, we're seeing higher oil prices because of reduced supply. But what we also tend to see on the geopolitical side is that we also tend to see that transmitting through gold prices, right? So if we think back last year, gold prices were increasing because the geopolitical environment was also becoming so uncertain. That did benefit South Africa. Unfortunately, this time around, we are being negatively affected by higher oil prices because we are a net importer of oil. So, unfortunately, I think I said all that to just give you an example with regards to how the politics tend to play out in commodities, and those commodities also then have an impact on the macroeconomic fundamentals, right? So to just close out that discussion, oil is feeding into higher inflation. When we had gold and platinum prices increasing, that was benefiting fiscal revenues, and it was also benefiting the rand because it was quite resilient, as we are net exporter of gold as well as platinum, right?
As you mention all the factors, geopolitics, oil, inflation unexpectedly rising to a 2-year high of 5% in June, what is your bet? I mean, a lot of economists alike have said it's 50-50. If the MPC chooses to keep rates unchanged, I mean, could that signal the bank believes the recent oil price shock is perhaps temporary rather than structural? What are your thoughts?
I mean, I would be quite shocked if they do keep the policy rate unchanged at this meeting. So as I indicated, that July has been such a whiplash, right? If we were to have had this discussion in the first week of July, I would have said, yes, it's 50-50. Oil prices have come down quite significantly from the peak in April. And yes, and I remember when I was speaking with my colleagues as well, I mentioned, it is 50-50. This July high did not make sure. But unfortunately, we have now seen this re-escalation in tensions. And it's just another reminder that the situation in the Middle East is quite uncertain, and central banks have to be quite cautious.
Yes.
And I think what pushes the SAB in particular for a hike at this meeting is that there's the supply side of it. All prices are higher, they're volatile, they're uncertain, they've pushed overall inflation higher. But when you then look at the underlying factors, right, when you look at where core inflation is, when you look at where services inflation is, I mean, services inflation at 5.1% is way higher than the 3% that the SAB is targeting. So, that's another key consideration for the SAB, is that they also need to reinforce inflation expectations at 3%, because they adopted a 3% target last year. Now, with headline inflation sitting where it is sitting, services inflation even further away from the target, they are in a quite a difficult position. And to retain that credibility that they can bring inflation back to target, it seems as if though they have a very difficult task of having to raise policy rates again at this meeting.
Very well. Thank you very much for that. A tough balancing act for the Reserve Bank, of course, facing one of the toughest interest rate calls. It's a 50-50 bet, as Mpho Molopyane, who's chief economist at Alexforbes, has said. But, of course, perhaps leaning on it being a surprise should it be unchanged. But, of course, we'll have to wait and see.